saw technology stocks reporting earnings. Some of the ones that I noted were Apple, which warned of a chip shortage that may impact their sales in both the iPhone and the iPad next quarter. Facebook also warned of a slowdown next quarter, and their stock took a hit. And then we had Amazon reporting last night, which reported a miss on revenue. Yes, Amazon. When does that happen? And then we had the Fed this week, and they do what they do best, nothing on both rates and bond buying. In terms of trade ideas, two of the stocks that we've been looking at are breaking out higher, and I'll be going through the charts shortly. I'll also bring you one brand new trade idea that you can take away. With that said, let's get straight to the charts. Let's kick things off looking at NIO first. So, NIO has remained incredibly choppy this week. Now, although the weekly chart looks to have the bullish flag pattern intact after holding the 40-week moving average around 39.65, so you can see that here. However, the daily chart has lost some ground, with bears taking control and breaking below the 200-day, which is around 44.26. There is definitely a sense that the move this week has been headline driven, with the China crackdown causing some traders, investors to dump stock. So here's one of the headlines. So this was one of the reasons why tech stocks, especially Chinese ADRs, were getting hit, and NIO was not exempt to this. Then headlines came out on Thursday suggesting Chinese authorities were looking to calm and reassure investors, and we saw a bounce back in NIO as well. Now for me, as long as 39.50 holds, there is room to go higher. My view would change only if it breaks below that. So keep a close eye on that key level. Remember folks, it's all about knowing the key levels and mapping out a plan or a process for both eventualities. This way you keep your head purely focused on price action and not by the news headlines. Now if we're talking about NIO, we have to talk about Tesla. So Tesla reported Q2 earnings, which beat on both earnings per share and revenue. And auto revenue came in at 10.21 billion, of which only 354 million came from regulatory credits. That represented around 3.5% of revenue. Other key fundamentals that I want to call out. So Tesla raised its electric car prices in the US. However, it left prices unchanged in China in order to boost its market share and remain competitive. Tesla's market share of the battery electric vehicle market in China stands around 11% as at Q2. In terms of the technicals now, if we look at the chart, for Tesla it's slightly more constructive compared to NIO, and this chart looks better week by week. Earnings were good, but sometimes momentum can override company-specific news, and Tesla has not been immune to this, and it did get caught up in the tech sell-off. However, price still remains above key trendline support, and as long as that remains, it's hard to get too bearish on Tesla. My view would only change if, and it's a big if price lost the 590 to 592 area. In terms of upside, the next area to look out for is around 694 to 700. This is only a short-term target. I do believe with this breakout, Tesla is on for a much bigger move. Now for my new trade idea for the week. And this week, it's all about getting defensive. And I picked out MERK as one of my trades for this week. The reason I think this is a good idea is volatility is beginning to increase. We're seeing a lot of choppy action across various major US indices. And if you want a defensive play, I think MERK is the one to go to. A couple of reasons in terms of fundamentals. So this week, the FDA approved Merck's Keytruda as a treatment for an early form of tough to treat breast cancer in combination with chemotherapy. And that saw the stock rise. Sales of this drug reached 14.4 billion in 2020. And now this is approved in the US, it can treat 30 types of cancer. Now this Keytruda is simply a prescription drug used in adults and some children with certain advanced forms of cancer. Then we had earnings report. So Merck reported quarterly earnings of $1.31 earnings per share, which was a slight miss in terms of expectations, but revenue did beat coming in at 11.4 billion. And you can see here with a snapshot of the sales of its key drugs. Every drug in its portfolio was up year on year. This is a solid company, and in terms of defensive stocks, it's a great play. In terms of technicals, if we have a look at the chart, so MERK has put in a big wedge formation that's been in play since the end of March 2020. Price has tested both the bottom and the top of the wedge twice, as you can see. Now, price did have a go at breaking to the upside of the 200-day, around 78, though earnings has pushed this back below. So that will be the immediate hurdle for bulls. For me, this chart remains constructive longer term and one to hold in the stock portfolio. My near-term target, should price get above the 200-day, is around $83. Now, a key update on other stocks. So Virgin Galactic, to start off with, is reporting on Thursday. So that's going to be a key event. In terms of the chart, space continues to base around the 200-day, around 30.63. It's gone a bit quiet, and that's expected until earnings has been released and we find out more about this share sale. If the 200-day is lost, 24 is the next major area of support. For the bulls, reclaiming 31.90 would be the first step in changing momentum in this stock. Then we have VIAC. So like Virgin Galactic, VIAC is reporting on Thursday as well. And in terms of the chart, VIAC looks to remain subdued, with price hovering just above the trendline support in blue. Getting above and closing above 42.30 remains the immediate hurdle. It did have a go this week, but failed to break above. So that will continue to be upside resistance. And finally, if we have a look at Goldman's had a relatively quiet week. Prices remain in a tight range between 378 and 368.60. My view on this chart remains the same. I wouldn't rule out a bounce up towards 384, 386, though I believe this is headed lower in the coming weeks. 368.60, which is the week's low range, is the first area of support. So there's my update, including one new trade idea for this week. I hope you found this useful. Thanks again for watching. Remember to hit that subscribe button so you don't miss any future content. And I'll see you at the next one.